Hello again. Joe Tringali coming to you from the Beacon. The Beacon is here to tell you where the rocks are in the stream and river and pond of your yachting experience. It's also here to tell you where the landing field is if you're in an aero club. Beacons serve many purposes, but mostly they're here to tell you how to get home safely and how to stay away from problems. And that's what we do right here. So if you have an auto club, an aero club, a yacht club, this is the kind of information that you need to hear. Last time I told you that we would talk about 501c3. This is the holy grail for all clubs. This is a section of the Internal Revenue Code that says not only does your club not pay income tax, but in addition, the money that you pay to the club is tax deductible to you. Everybody loves that idea, right? Most clubs don't fit in that category. Most clubs come under 501c7, which means they don't pay income tax, but your dues and your expenses are not deductible, okay? Now, before we go further, let's take a minute to talk about corporations, because these things fit together. Corporations are a product of state law, not federal law. Corporations are incorporated in the state in which the corporation resides. Most corporations, well, all states recognize two kinds of corporations. Business corporations, which means you and your buddy set up a corporation and you're going to sell real estate or hardware or whatever, and you intend to make a profit. Then there is the non-profit or not-for-profit corporation. Depends on the state and what they call it, okay? But it's non-profit. That means that the corporation is not seeking to make a profit. It is not going to distribute money to its shareholders or members, but it can pay for legitimate services. Before you get any crazy ideas, that doesn't mean you can be elected president of your aero club and pay yourself $10,000 a year or a month or whatever, okay? No. But it does mean, for example, if you have an aero club and you have 6 people who are members and they all pay dues, and the airplane owned by the corporation needs some mechanical repair and you happen to be a licensed mechanic, then yes, you can perform that work and be compensated for it. Not just for standing around, but for actually doing work. There's a third type of corporation that is recognized in something like 26 states. I haven't counted recently, but it's not everywhere, and it's called a public service corporation. I have some friends out in California who have such a corporation. It was actually incorporated in another state by a lawyer over there someplace, and every time I'm with these people, I tell them, look, you need to have somebody check the law in that other state because that applies to you. Doesn't matter that you're in San Diego or Los Angeles or wherever. The law applicable to your corporation comes from the place where it is incorporated. And a public service corporation has certain rules and regulations that go over and above the usual non-profit or not-for-profit corporation. And by the way, those rules and regulations can change, okay? So you have to keep up with all this stuff. State legislatures change laws all the time, and they insert words and take them out, and they don't just do that to use up paper. They do it because those words have specific meaning. So again, the Beacon. I'm not telling you what to do, I'm just telling you where the rocks are, okay? Now that we're through with discussing corporations, let's talk about the Internal Revenue Code. The IRS code is something separate and apart from corporation law. It is federal. If you're going to create a corporation that you don't want to have that corporation pay an income tax, that want to be under Section 501, generally speaking, of the IRS code, then when you set up the corporation over here, don't set up a business corporation, because when you go back to the IRS guys, they're going to say, wait a minute, you got the wrong boat in the wrong pond here. Okay, so you got to keep this stuff consistent. Okay, so you set up your not-profit, non-for-profit, not-for-profit, whatever. Now, you apply certain sections of the Internal Revenue Code. Section 501c7, as we discussed last time, is generally speaking for clubs, where the business of the club is collecting dues, collecting dues, collecting dues. I also told you that the club can earn outside income up to 15% from non-members. If you go over that, you lose that 501c7 exemption, and now the Internal Revenue Service, regardless of what you call yourself over here, they're going to call you a business corporation and you're going to pay income tax. Okay? So, 6 guys have an aero club, 6 people. Okay? They're all pilots and they want to own a plane. And so they set up a not-for-profit corporation. These 6 people are the shareholders. The corporation owns the plane. Can they rent that plane out to non-members? The answer is yes, provided that the income does not exceed 15% of the income of the corporation itself. So, if you're going to rent that out, either your dues are going to be very high or the rental is going to be very low, because you've got to stay within that 15%. By the way, I told you last time and the time before, I'm not a tax lawyer. I'm only telling you where the rocks are. Okay? Now, let's go beyond that and say, oh, we want to be 501c3. What is that? You, Your Club, and the Law. Okay? It's a great book. I wrote it. Go on the internet, culkinsharbor.com. You can pick one up for 20 bucks. I'm not shilling for books here, but it's the best investment you can make. Okay. 501c3 says that if your corporation qualifies as a charitable, educational, blah, 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 okay, then your members can deduct the money they pay to you. This is not a joke. One of our largest boating organizations is United States Power Squadrons, now known as America's Boating Club. A very good friend of mine was a longtime member of USPS, just as I am. And he was a very, very good businessman, and his wife was a very, very good businesswoman, and they kept track of every dime they spent for Power Squadron. That meant mileage going to meetings, that meant out-of-town meetings, hotel expenses, meal expenses, uniform expenses. They deducted all of those as a charitable expense. Their tax return was never questioned. The Power Squadron's been around for a long time. It is a legitimate 501c3 corporation. What's an illegitimate use? Okay? Gosh, we're almost out of time again. Okay, let me just tell you this case. Branch Ministries versus Rosati. There's a church called Branch Ministries, and they had a 501c3 corporation, which meant that people who gave them money could use a charitable deduction, and the the commissioner of the IRS, Mr. Rosati, said they were using that corporation improperly, and he revoked that exemption. The church took Rosati to court. The case that I'm going to talk about in the very next segment, I promise you, okay, is Branch Ministries versus Rosati. It gives you a very clear picture of the purpose of Section 501c3. Until then, Joe Tringali saying, remember the beacon, watch out for those rocks.